Have you ever wondered if there's an easier way to actually make money in the stock market? After working with hundreds of beginner investors, many of them working professionals and business owners just like you, I've discovered one thing that blocks 99% of people from ever seeing profits. I kept seeing the same fatal pattern, the one thing that silently kills gains, no matter how smart or hardworking you are. I'll show you what it is and how to fix it. It's not because of bad stocks or the economy or even how busy they are, but because of one silent mistake that no one talks about. It's this: they don't allow their assets to grow into profitable moves. They exit winners too early and hold on to losers for way too long. You can do everything right, research the right stock, time your entry to perfection, start seeing some profits, but still end up with nothing. Not because you didn't know what to do, but because fear got in the way before you could follow your strategy. So the question, why would anyone do that? Well, it all comes down to two things: fear and greed. To show you what I mean, let me share a personal experience. I purchased two stocks for my portfolio when I first started out. To begin with, the purchase was made on a hunch rather than any thorough analysis, so the foundation was shaky at best to start with. But one of the stocks was in a strong uptrend, and the other, well, it was bleeding cash, dropping every week. Now, you'd think I'd cut the loser and hold the winner, right? No, I did the exact opposite. Now, this decision might sound small, but what happened next is a perfect example of why most traders and investors never build wealth, no matter how many stocks they buy. Ultimately, I convinced myself to take profit and sold the stock that was going up. Now, why was that? Because it stopped moving. It actually paused and went sideways. And in my mind, that meant it was a stock about to fail and would not go any higher. So I cashed out with a tiny profit. And the losing stock, well, I held on to it. I convinced myself it will bounce back. It just needs a bit more time. Spoiler alert, it didn't. That losing trade dragged on for months, sucking capital, energy, and actually confidence. Meanwhile, the winner that I sold, that boring sideways stock that was about to fall and could not go any higher, well, it broke out of its base and exploded in price just days later. This is one of the most common mistakes I see today beginner investors make. But it's actually not just beginner investors. Even advanced traders and investors fall into this trap because the real problem isn't technical. It's psychological. They treat sideways consolidations like a red flag, when in reality, it's often just the market catching its breath before the next big leg up. And why did this happen? Because most investors do not understand market cycles. Stocks do nothing for a large period of time, and then boom, they start moving and can cover a lot of ground over an extended period of time, often months, even years. So when a stock pauses, even after showing strength, they assume the move is over. They get scared, they close off their position, and they never let the compounding magic happen, which is when you have multiple winning stocks running side by side and you just keep strategically buying more and more and more of each one. And the portfolio, well, it grows exponentially, which to experience in real time is mind-boggling. You simply would not invest any other way because nothing else grows your portfolio quite like how compounding does. So let me ask you this. Have you ever exited a stock too early, only to watch it run for months without you involved? It stings, right? You were in the right stock, but you exited based on emotion, not strategy. This is the emotional roller coaster that traps most traders and investors. And the root of the problem, they simply do not have a plan. Most people invest based on a hunch, a tweet, a tip from their favorite influencer or Reddit group. And when it moves up a little, well, they panic. And the reason for this, because they never asked the one question that could have changed everything. What does success look like for this stock? If you don't define that before you enter, you'll always make emotional decisions in the moment. And emotional decisions, well, they're expensive. Here's something important that many investors miss. A rising stock is actually less risky than a falling one. But beginner investors don't see it that way. They feel safe taking a small profit and feel like they're managing risk by holding a loser, hoping it gets back to break even. But let me say this loud and clear. Hope is not a strategy. Fear is not a signal. And your feelings mean absolutely nothing to the stock. Only one thing matters: what the chart is telling you. Take a wide view of the S&P 500. Zoom out. What do you see? Over the decades, even through crashes, corrections, pandemics, and elections, it keeps going up. That means if you align with the long-term trend, your stocks will too. Take McKesson, for example. Since 2022, it has risen almost 200%. Let that sink in. While day traders are celebrating 10 or 20-point moves, long-term investors who understand the trend will capture thousands and thousands of points. And here's the secret sauce. If you bought that stock multiple times during its uptrend, as we teach in our private community, you wouldn't just have one position making money. You'd have several. That's how wealth is built. That's how you compound. But most people never see those gains because they never stay in long enough. And they never stay in long enough because they never zoom out. They're glued to 5-minute charts, never seeing the big picture. They get shaken out by a 1% dip on a Tuesday, ignoring the fact that the stock is in a multi-year uptrend. And when it eventually consolidates, they think it's the top. Let me tell you something. A strong stock rarely goes straight up. It pauses, it rests, it shakes out the impatient, then it continues. If you sell during that pause, you miss the real moves. So, how do you fix all of this? These are the 6 rules we share in our private community to help investors avoid common mistakes and achieve consistent profitability. Pay close attention to rule number 6. It's often overlooked, but highly important. Okay, number 1, create a trade plan. Before you enter, set your entry, stop loss, and target exit before you click buy. Know what success and failure look like in advance. If your stock hits your target zone, let it ride. If it breaks your stop level, cut it with no hesitation. No more hope and pray trades. As the expression goes, plan the trade, trade the plan. Okay, number 2, use trailing stop losses instead of hard profit targets. A trailing stop moves up as your stock rises. It locks in profits while giving your trade room to breathe. Trailing stops let you stay in the move while protecting your capital. The trend is your friend until the bend at the end. It's a timeless mantra. We typically hold winning stocks for 12 to 18 months, often longer, before a true bend comes in. Okay, number 3, study price action and consolidation patterns. Most sideways movement isn't a top, it's a base. Learn to identify healthy pullbacks and consolidation ranges. Stocks often rest before the next breakout. If you sell too soon, you miss out on the real run. Patience is often one of the most underrated yet handsomely rewarded investor skills. Okay, number 4, scale out. Don't sell all at once. Take partial profits. Let the rest ride. Trim, say 25% or 50% if you want to lock in something or take your initial risk off the table, but keep the core alive. Cut your losers short, let your winners run. Again, it's a timeless mantra. Okay, number 5, journal every position. Why did you enter? What were you thinking when you exited? What did the stock do after you entered? Did you actually follow your plan? This simple habit can reveal everything that's holding you back. And number 6, surround yourself with smarter investors. Trading in isolation is a fast track to repeated mistakes. In our private community, we don't just share trades, we help each other build conviction, stay in winning positions, and trust the trend. We teach you to zoom out and think in trends, not ticks. Because small profits can be satisfying, but they don't last if they're erased by losses. Long-term wealth, however, is built by holding onto big trends. Take a step back and stay the course. If you want real results in the market, it's not about picking more stocks. It's about staying in your winners long enough to let the magic of compounding do the work. But knowing this isn't enough. To truly win, you need to fix the hidden habits that kill your profits without you even seeing it happen. That's exactly what I break down in the next video. How I trained 1,000 investors and why most still couldn't make money.